everybody. Happy Tuesday. Gina here with your weekly market update. Hope that you all had a wonderful 4th of July holiday weekend. Last week was obviously a shorter one for the market due to the holiday, but it was still productive. The S&P was up almost 2% last week, and the NASDAQ was up actually exactly 3.5%. So things are looking good there. We have been getting a lot of questions recently, I should say again recently, on what is going on in the economy and why is inflation still so important? Haven't they figured that out yet? So I wanted to just take a quick moment today to readdress the dynamic and relationship with inflation and what's going on and interest rates and why that's still an issue. So bottom line is that we need to remember when inflation is high or still relatively high, we need to discourage people from spending so that demand cools off and prices of goods and services can drop. So by raising interest rates, borrowing becomes more expensive. And if borrowing is more expensive, then people should, in theory, and they do, spend less money. However, it's really not that simple or easy, because what we have to be mindful of and what the Federal Reserve needs to be mindful of, who sets the policy, is if less money is being spent in the economy, that's bad for business and companies and therefore the economic markets. So it really is a delicate balance between how much and how fast and if we can raise rates. And so that's why that dynamic and relationship between inflation and interest rates are still very much a topic of conversation, because inflation has not come down to the levels that the Federal Reserve wants them to be at. And so Chairman Powell spoke in front of Congress yesterday, and bottom line, the gist of all of that was that he acknowledged that high inflation is still causing hardship, but reaffirmed their commitment to returning to inflation of 2%. So, of course, it's really not that simple, and as I just explained, but that's because there are inherent risks on both sides of the equation. So we will continue to evaluate and interpret all of this. Right now, it seems that the rate and the levels in which they have raised rates and are projecting are doing the job and are doing a good job. And we'll continue to evaluate, like I said, and interpret all of this for you and your portfolios over time. But as always, if you have any questions on how this affects you or your portfolios, feel free to give us a call. And otherwise, we will talk to you next week. Okay, take care.